For exercise 2-7, we're going to record transactions in the journal. And again, this is the journal, and remember, the journal does not have balances. So to find balances, we would need to post the journal amounts to the T accounts. Remember, the T accounts are the informal version of the ledger. And it's the ledger, which in other words is these T accounts, that has the account balances. So remember, the journal does not have balances, so if your boss says how much cash do we have, we'd have to go look at our T accounts. Sacramento Optical completed the following transactions during the latter part of March. On March 15th, purchased supplies on account for $3,400, and then March 28th, paid $1,200 on account. So again, these requirements are at the top of each journal entry. So for requirement 1, we need to journalize the transactions of Sacramento Optical, include an explanation with each journal entry. Of course, record debits first, then credits. Select the explanation on the last line of the journal entry table. And the last line of the journal entry table is right here. So it says on March 15th, we purchased supplies on account for $3,400. They've already included the date here on the left, so we don't need to worry about that. And notice in this part here, it does not say anything about the supplies being used up. And because it does not say these supplies are used up, they have a future value. And if something has a future value, what type of account is it? That is an asset. All right, so looking at our accounting grid, is this asset increasing? Do we have more office supplies, or more supplies in this case, or less? We have more because we just purchased them. Therefore, supplies are increasing. And how does that increase? It increases with a debit to the supply. So we'll get supplies account here and debit of $3,400. And we know since our debits have to equal credits, that our credit amount will be $3,400 as well. So now what account are we going to credit here? Well, notice it says we purchased the supplies on account for $3,400. So on account means accounts payable. We have increased our accounts payable since our debt has gone up by $3,400, since we're promising to pay later. And again, accounts payable is a liability, and when we have more liability, that increases with a credit. So that's why I am crediting accounts payable. And then let's get our description in here. So we purchased supplies on account. And now this is not a very realistic explanation. A more realistic, real-world explanation would be the name of the company that you owe this money to. So now let's go ahead and check our answer. Well done. All right, so now on March 28th, we paid $1,200 on account. And because it says paid, we know cash is involved, and cash is an asset. And is our cash increasing or decreasing? Well, since we paid it, it is decreasing. And looking at our accounting grid, how does cash decrease? It decreases with a credit. So I'm going to have to skip this first line here and input cash here on the second line because debits first and then credits. So that's why we are skipping the debit for a second here. So we know our debit and credit are going to be $1,200. So I can go ahead and input those now. And because debits have to equal credits, we have $1,200 here on this side and $1,200 here on the credit side. And let's see why we paid this $1,200. So anytime it says paid on account, that means we are decreasing our accounts payable. And what type of account is accounts payable? It's a liability. Because we're decreasing accounts payable, we have to debit accounts payable. So that is going to be our debit account. And then we're going to go ahead and have our explanation here. So we paid cash on account. Let's go ahead and check our answer. Well done. And again, note the explanation on this one. A more realistic explanation would be what company we paid. And because we have to keep track of that stuff separately in the real world, we're just beginners, so we're just trying to make it easier here. So let's go ahead and check what our next business is here. So requirement 2, we have to requirement 2, the following T accounts have been opened for you. Cash beginning balance of 14,000, supplies and accounts payable. Post the journal entries from requirement 1 to the accounts and then compute the balance in each account. Use a balance posting reference on the proper side of each account to show the ending balances of the accounts. So essentially what we're working on below here is, well, let's just say your boss, after you recorded these two journal entries, these two transactions, they ask how much cash you have, because that's the first thing they will always ask. Well, we can't just look it up here. So we know that cash went down by 1,200, but we don't know the balance, and that is where the ledger comes in here. So these are the more informal version, the T accounts, and notice they already have 14,000 in the cash balance. The previous balance has also been given here, beginning balance of 14,000 for the cash. So now they're going to have us post the journal entries from up above, from requirement 1 down below here into requirement 2. So the correct order you start this is from the top, you work your way down. So we're going to go to the top here, and the first account we're dealing with is supplies. So supplies are increasing by 3,400. So we have the supplies account, and that is going to be a debit here on March 15th. Also check our date here, March 15th, debit for 3,400. So it's going to go in the same place on the T account as on the debit side, left side. And then what this black horizontal line across here means is that we're going to be calculating the balance. So we put the balance below the transaction here. So that's going to be balance of 3,400 on the left side here for the supplies. So then we're going to scroll back up to requirement 1 and see what our next account is. So we have accounts payable, a credit for 3,400 on March 15th. So we'll scroll back down. We're going to have March 15th as our date first, and then we are going to credit for 3,400 just like it was in the journal entry. And again, we have that balance line here below, but notice our second transaction also deals with accounts payable, so we're not quite done with this one. So on March 28th, that next account is also accounts payable. So we're going to put this in on the left side, the debit side, since we are paying down our liability, our accounts payable, by 1,200. And then we can balance our accounts payable. So the balance is going to go ahead and be on the left side. And we're always going to put the balance on the bigger side here. So we're going to take 1,200 from 3,400, and that is going to give us $2,200 balance left in accounts payable on the credit side. Since that is debt we still owe. And then last but not least, we need to post the cash account here, this part of this transaction. So we paid 1,200 in this this transaction here, so we're going to go ahead and input March 28th here on the credit side, since again we took out money, and this was on the credit side up here for our journal entry. So then we're going to input 1,200, and we're going to need to do a little bit of math again here. So we're going to need to take 1,200 away from 14,000, and that is going to give us a total of 12,800 here on the debit side as a balance on the cash. And remember to put the balance on the larger side, and we can see that here is the side with the 14,000. And remember, the balances should almost always be on the side, the plus side, that's on the accounting grid anyway. So now you can answer your boss's question. We've got $12,800 cash. Now your boss also wants to know how much accounts payable do we have, so we have to calculate that, but we have that again here for that 2,200. So again, the reason that this is on the credit side is because the plus side for the accounts payable, a liability, is on the right side, the credit side. So now to conclude our problem, you can tell your boss that we have 12,800 in cash. We also have a $2,200 balance in accounts payable, and we also have $3,400 in supplies. So let's go ahead and check our answer. Nice work. So now in our homework, we're going to be doing lots of journal transactions. We don't do a whole lot of posting to T accounts, but always remember this is really, really important in the real world. After every journal transaction, you would immediately post to the ledgers, which is the T accounts, because we always want to know what our balances are. So in future homework problems, we'll mostly just be doing the journal, but just remember we would need to post the journal information to the ledger and the TA accounts, in other words, so that we have updated balances.